Hello, everyone, and welcome to the Veebee Money Show. And on today's episode, we have with us a newbie portfolio manager, Utsav Shrivastava of KRIIS Metaverse Equity Fund. Hello, Utsav, and welcome to the show.
Thanks, Vineet. Thanks for having me here.
So, Utsav, first of all, you have to tell us about your background on investing and how you got into this business of being a portfolio manager, because we've known each other for a long time and it was never there in the picture.
Correct. So I started my equity journey in early 1990s. This is in fact pre-Harshad Mehta phase. And so one of my relatives used to be a stockbroker with the Bombay Stock Exchange, and that's how I came into. I started loving equity, and in fact, as a college going guy, I used to remember, and this is pre-internet age, so I used to remember each and every company, each and every result, what is the share price, what is the equity, everything. So I was like, you can see like a boy wonder in equities. And then I started my career, so I've been a career banker. So what banking brings to the table for me is that I got to understand diverse industries and diverse businesses and diverse people, and I've seen businesses go up and I've seen businesses go down. So my long stint as a banker helped me to understand people, understand businesses, and understand what ticks and what doesn't. So that's how I started as a full-time investor after my banking thing. And then a lot of people used to tell me that, "Dear God, why don't you manage our money and everything?" So I wanted to do it in a structured manner, not in a haphazard manner. And that's how the thought process for the PMS came along. So we've just launched this new PMS called KRIIS Metaverse, and we started getting lots of traction. A lot of people are very interested in it, and in fact, we've started collecting money, and we're seeing very good flows coming in from this.
Right. So how would you describe your style of investing? Are you a value investor? Do you focus on growth? Or are you a momentum investor? Where would you exactly put your investment philosophy? Which school do you belong to?
So I am in a school. My legs are on two boats. One is value. So unless there is value, like if you, I don't believe in this BAP thing, like buy at any price uh, concept. So I don't subscribe to that. Things should have value, and definitely it should have growth, because otherwise then it becomes a value trap. Uh, if you have value and no growth, then it becomes a value trap. Then think the stock is cheap and it remains cheap for a long period of time. Yeah. That's not my style. So I'm looking at uh, betting on managements that are able to deliver exceptional growth over periods of time and with the right thought process.
So, can you discuss your approach to asset allocation? Of course, I know before we come to equity, I would like to understand your thought process between debt, bonds, and other assets for your portfolio.
So I'm an out and out equity guy, and I genuinely believe that there is a bull market 365 days over here, irrespective. Somewhere in the market, there's a bull market happening. And our fund is going to focus on finding where that bull market is going to come and be one step ahead of everybody else and try and load up before that happens. Debt or money markets, I will use more as a function of when I don't find anything to buy, then I will buy debt. But debt for me is not going to be a strategy.
Okay. So, given the thing that, we are in the aftermath of the COVID and then the Russia-Ukraine war, what is your view on the current market conditions? And do you see any risks or opportunities that are present in the market?
So basically, what has happened now is that markets are very volatile, and markets will continue to remain volatile because now there's just too many things happening across the globe. And earlier, what used to happen is that individual countries used to be insulated from each other.
Right.
So that insulation is somehow not that comfort of insulation is not there anymore.
Right.
So markets will be volatile, uh, and this as a process is going to. Well, we have to live with volatility now.
Correct.
But I am very bullish on the prospects of India. I'm very bullish on the prospects of the companies that we have identified and which we are going to invest in. Uh, our thought process is more focusing on companies that cater to India uh, and not so much abroad, because this is where all the action is. We are the one of the fastest growing economies with one of the largest consuming population, which is growing, and the per capita income is just coming up year on year. And you can see that when you go on the roads, you see the number of people on the roads. In particular, you see the number of two-wheelers. So the less number of cycles. So basically, you can see the kind of uh, filtration of money which is happening down the ladder. And as these people elevate and consume, uh, trust me, when India comes to consuming, nobody can supply enough.
So, just going back one questions, where we spoke about growth and other opportunities and value. So how do you balance the trade-off between growth and equity, right?
Growth and value.
And between growth and value. And is there a particular approach that you favor and why?
So two things. One is that typically our stock picks are those which are not widely owned or widely discussed, or are in the a lot on WhatsApp groups or media or publications or like that. So we make that extra effort to go and hunt for stories which are not there in the popular domain. And the idea is that when we own a company, you should know exactly what the company is doing and where it's going. And unless I don't see value being created by the growth, I will not buy. So if for example, if there's a company which is trading at X and it already discounts 3 years down the line numbers, and irrespective of what those numbers may be, I will pause. So I will put that company on a back burner. I will do all my study, but I will definitely wait for it to come to my buy price. See, momentum, anything can happen in momentum. Stock can become 5x, 10x, whatever. Uh, or give a 50% return, but we are not momentum. As PMS, we are not momentum chasers.
Yeah.
We'd ideally like to be there before the momentum comes.
Correct. So, can you talk about some of your most successful investments and what you saw in those companies that made them attractive? So this question is in relation to our previous question, of growth and value. And I know that you are not very keen on talking about stocks, in particular naming that. But, we can always discuss some of your historical trades which were taken 5 years back, 10 years back, and which have no bearing on this market.
Okay, so I can, rather than stocks, I will tell you themes that I have caught on early and made decent money there. So 3-4 years back, I had invested personally quite heavily in defense sector, and I could see the winds of change happening in the defense thing. One is obviously the Make in India thing. Second is the rising conflict of India on its borders. And third is the genuine effort made by the government to promote Indian industry, especially in defense. And by coming out with negative lists and all those things. So I had identified this theme along with our friends, and we really bought heavily into them. Most In fact, all the stocks bought at those points have become multi-baggers. Another thing which I liked and invested in was hospitality and hotels at the peak of COVID. So my thing was very simple, that either COVID will wear off or we will all die. So it doesn't. So if we all die, so it doesn't care. It doesn't matter what your holdings are, and if eventually COVID wears off, then everybody is going to travel, because everybody will shut down and put into claustrophobic spaces for a long period of time, for years. And when they would be free to travel, they would travel with a vengeance. And this is exactly what has happened. And again, there is a lot of money has been made in a very short period of time. So like these, so there are themes that keep coming up. Railways was a very good theme. We made a lot of good investments in railways. Again, you could see the change happening, the kind of trains that were coming, the kind of the focus on the railways by the Prime Minister also. Like, he was going to flag off individual trains. So you could see that his focus is there. And again, privatization, new trains, new orders, huge thing. Now I similarly, I'm very, very bullish on cable industry right now, and the power sector. I think a lot of norms will be now put in to increase profitability, reduce leakage, and bring power to the last mile. Again, it's such a huge opportunity for India. One sector so there are a couple of sectors where the opportunity happened, but wealth wasn't created. Again, this is also interesting to know, where your thesis was right, but still money didn't get made. So one was telecom, where India went from zero mobile to a state where everybody has a mobile, and yet money was not made in the sector. And similarly, also in infrastructure, that India makes today, I think 80 or 100 kilometers of roads every day, but no money has been made by in infra companies. So there,
let me tell you, in my opinion, the telecom boom is going to come back. Just wait for a year. So the 6G stacks that we have put up are going to be a game changer.
Yeah, I really hope so, because these guys have been at it for like donkey's years and never really paid out anything for the shareholders.
But the landscape of equities is changing so rapidly. We have AI coming, disrupting everything. So, how do you stay on top of the latest trends and developments in the equity market? What sources of information do you rely on? How do you differentiate yourself from the masses out there?
So one is, I try to consume as less data as possible.
That's interesting.
Yes, because what happens is that overload of data muddles with your brain. So we don't need to own 500 companies. We need to own 20 companies which we know inside out. Right. And once we found those, and we know what the thesis is, and then we just have to wait for the story to play out.
Right.
It's like you deciding who you want to marry, and still somebody keeps showing you girls. So it just like messes with your brain.
Right. So can you discuss any specific challenges, setbacks that you faced in your career? Of course, in investing, have not secured your married life, and how you overcame them.
So one of the challenges that I have, one of the setbacks, I would say, is that you need to do your own due diligence. In the sense that every promoter thinks he's the next Dhirubhai Ambani. And I believe rightly so. I think promoters need to be bullish on their business. As captain, they have to keep a brave face to their for their employees and their team, and be very combo about what's going to happen. But one has to do our own due diligence and not rely totally on the promoter or the promoter's vision. So do your due diligences, your scuttlebutts, and everything are very, very important. So so early in my investing career, especially as a full-time investor, I was quite swayed by uh, the promoter and the promoter's vision and stuff like that. So now, obviously, now with maturity and losses, the due diligence process is much more stringent. Today, basically, I don't buy a company unless I've seen it inside out.
So, what advice would you give to someone who's just starting out as a fund manager?
So basically, what would I advise myself? uh, it's basically buy what you know, one, and have a longer term view about the companies that you are investing in. For me, a company that I buy, I would like to think of myself as a owner of the company and not a trader. Uh, and I think there it's a very important entry process, and I think that determines your success rate as well. Uh, so if you bought a company as a owner, you do your due diligences, you're putting your own money in it, and you've done all your scuttlebutt and you've done your thesis, and your thesis is all recorded and put on paper, I think your chances of going wrong is much less. Uh, I think where most people go wrong is like buying on tips. So just because somebody said, and then you buy it, or you buy whatever is the flavor of the season. The flavor of the season just is mangoes, and mangoes just go bad if you get them too long.
So, speaking of these mangoes that go bad, how do you manage the risk in your portfolio? Are there any specific tools or strategies that you use?
So one is that is in terms of allocation. So we don't over allocate to any script or sector. That's one. And secondly is that we monitor developments regarding that script and sector very carefully. And this is where I was just saying the overdose of information. So if you declutter your mind, and then you can focus much more on what you own and what you're doing.
Right. So, can you walk us through your process of selecting stocks and companies to invest in? Are there any particular factors you look for?
So good question. So one thing that I ask myself is that any company that I invest in should have some edge over others. Now that edge can be in various forms. It can be relationships with their clients. It can be in terms of any IP or patents that they own. It can be in terms of their size. So you can be in a commodity business, but your size that becomes your edge because that nobody can match you on pricing. Or you are sometimes we take a bet on the promoter. So sometimes you get the exceptional promoters that who doesn't have any of this, but his thought process and vision is very, very clear on where he is and where he wants to be. And so there are people like this, and you meet them, and they we take bets on such guys as well.
So, how important is networking in your line of work? And how do you build and maintain rapport with and relationships with these industry professionals and also other investors who can help you connect?
Good question. So my philosophy is that I use my network not to get stocks to study, but which stocks to avoid. Okay. Because which stocks to buy changes with the season, but stocks to avoid remains avoid forever. Unless some drastic things happen, but by and large, this thing holds true. So that is how I leverage my network. And the network also helps you because, see, everybody has a limited brain RAM and a limited time to study new stocks and stuff like that. So if you have a large network of people, you do come across their ideas and they discuss it with you. How I keep my network alive, or how I keep it green is that I never cheat. So if you, let's say, if you today give me a stock that you like and you want me to buy, or you are buying and I like it, I will not front run you. I will not buy a single share till you say that, Utsav, I told this stock to you, my buying is done. Uh, and similarly, if somebody, uh, I never tell somebody to buy a stock which I am selling, or I never tell somebody to sell a stock which I am buying. It is something that I've never done, will never do. So slowly and slowly over a period of time, you do build this positive reputation in the market, and that's how your circle becomes stronger and stays longer. I think equity markets is one place where relationships are very short-lived by the very nature of markets. Because today you might tell somebody to buy something, and that bet goes wrong, and you lose that relationship. I think it's very, very important to have long relationships and deep ones.
Right.
And the quantity is not important. The the quantum of relationships is not important. It's important to have few good relationships which last long.
Right. So, this concept of scuttlebutt, how you do it, can you explain it to our viewers?
So typically, when you are looking to buy a company or looking to buy, uh, for example, let's say you're looking to buy a clothing company. The scuttlebutt basically goes. Firstly, you go and order uh, some stuff online and see how the process is, and whether they do actually deliver to your place, and whether the product is what is shown. A lot of times what happens is what you see is not what you get. Uh, and then what was the process? How was if you had any issues with it, how were they able to resolve it? And secondly, then you actually go to a physical store. So you go to a physical store, you get a look and feel of the store and how it is, and whether you're the only person there or there are other people buying, and whether the salesman knew what they were talking about, whether they get paid on time, what is the quality of the product compared to other competition. So all these kind of scuttlebutts is something that you do, and then you actually wear the clothes that you bought and see whether the fit remains and the color remains, the color doesn't run, stuff like that. So this is just for one. And it goes for, so if you want to do a scuttlebutt in QSR, you go and actually eat at the restaurant and see how many people are. Then you do this at various times, and you do it on weekdays.
Right.
Because weekends give you a distorted view, because every place is full on a weekend.
Right.
You do this on a weekday, and you go and check how it was. Eat the food. Whether you yourself would like to eat it again and again. If you don't like it, then fair chance that others might not as well.
Correct. So, when analyzing a company, everyone knows, what are the growth factors to look at. What are the things that are important to you when you consider the red flags that you would like to avoid?
So the first red flag for me is related party transactions. So I don't like companies with very high RPT because the company should be able to stand on its own, and the promoter's full energy should be on this company. So typically, when I tend to avoid, unless it's very compelling, promoters who have got multiple companies.
Correct.
And transactions between them, because then you don't know where the money is being made. The company, so typically what they do in one company, makes stuff and sells it to the other at cost price, and the money is made in the unlisted entity normally what happens. So that is something that I tend to avoid. I also tend to avoid companies that need to continuously do capex, because and then hence you never get free cash flow. So you will see operating cash flow, but you will never see free cash flow, and it always keeps going into capex. So telecom is a good example of this. And as a friend of mine says, like it's a cow drinking its own milk. And so you are happy owning the asset, but you're not going to get anything out of it.
So we have been interacting a lot, and I see a lot of your focuses on small cap, micro cap stocks. You know, what makes these type of stocks attractive to you?
So one is obviously the upside potential if you get it right. And the other thing which most people don't realize, and they say like you buy microcap, was every stock in India was a microcap. I still remember the day Infosys was listed, and I think equity was 30 lakh shares, and it was listed at 91 and came down to 87. Which is what? It's a 30 crore market cap company, less than 30 crores, 27 crores. So that was a micro cap. Every company in India was a micro cap. Bajaj Finance was a micro cap. Bajaj Finance used to trade at nine bucks in 2009, 2008, 2009. So just by saying that on ignoring or neglecting a company because it's a micro cap, you might be doing yourself a big disservice. I think the size of fight in the dog is more important than the size of the dog.
So, what are some of the biggest challenges of investing in small micro cap companies, and how do you navigate these challenges?
So the first challenge is obviously liquidity. How to get a large chunk, and secondly, how to dispose it off. Because the liquidity in these counters is not there. The second challenge is that what if the thesis actually happens, but others don't come to know of it? And you can't go about tom-tomming your own stock that you own to others. So that is a challenge. So, but again, I was saying for this, like good stock is like a pregnancy. So sooner or later, everybody comes to know about it, and that happens. But the phase in between, when the company is doing well and yet nobody is buying it, is very, very difficult to pass. So because you start questioning your own thesis, that am I right? Am I the only guy who's seeing this, or why isn't everybody else seeing what is so obvious to me? So that is a big challenge in microcap investing.
So, how do you manage risk in these small companies? Yeah, you want to dispose of them. There's a challenge. So, how do you manage risk out?
You manage your risk by position sizing. So basically, what happens in microcap investing, you need to make that much more effort. Because let's say if it was a large cap, I would own 5 stocks. If it's a mid cap, I would own 10. If it was small cap, I would own 20. If it's micro cap, I need to own 50 stocks. If it was all micro cap. So the effort that you make in tracking, finding, shortlisting, Scuttlebutt and everything is much more, because you can't invest large amount in any one of them.
So, what advice would you give to someone who's starting out anew in small micro cap investing, but is unsure where to start?
So I think the best way to walk is to take the first step. So similarly in investing, I think the best teacher is Mr. Market. And Mr. Market will teach you if you're willing to learn from your mistakes. And I think the key in investing is not to make the same mistake twice. Everybody makes mistakes. Even the best investor, you name XYZ of the investing world, has made mistakes, is making mistakes, and will make mistakes in the future. But what differentiates good investors from average or low grade investors is that they don't make the same mistake twice. And when they make a mistake, they lose small, but when they get it right, they win big. So that is essential. So don't be afraid of making mistakes. You will make, see however much you filter your chai, at the end there are some tea leaves left in the cup, right?
Correct.
Similarly is investing, that however much Scuttlebutt you do, or filters or screeners you run, you will end up with some duds in your portfolio. It's a part of equity, and the earlier you learn to live with it, the better.
So, can you talk about some new exciting opportunities that you're currently exploring or you are excited about in the near future? Any themes? So we've spoken about railways, we spoke about telecom. What are the other themes that you think can become big going ahead?
So I am very, very bullish on alternate energy. I think so. Obviously, people talk about Suzlon and all these kind of companies that were there and uh, went bust or didn't make it in the first round. I think most businesses give you a second leg. When people have sorted it out, they've learned from the mistakes and they come back and do it properly. I think renewable energy, especially solar, is going to be very, very big from here. I continue to be bullish on defense, but now on more different kind of things. So drones, I think the drone uh, is as a theme. I think investors can take a serious look at it, because you normally think of drones as uh, places where for filming wedding scenes or for shooting or stuff like that, or for defense. I think there are multiple uses, and they will continue to be. I think India can become a drone hub for the world by 2030, and that's some place where I see a lot of upside. I see a lot of upside in aviation, uh, but again, not in the primary, not in the flyers, but in the people who provide the speeds uh, around the companies. So ancillary company, I am very bullish on that.
So, I'm going to ask you a few pessimistic questions also. If you notice, I've been asking you what things people should not be doing. Because last year people have burnt a lot of money, lost a lot of money, or not made money after seeing a big bull run happen, right? So how do you manage losing positions in your portfolio?
So
Do you have
again,
any specific strategies for cutting your loss or minimizing risk?
so basically, what you have to do is that when so positions do go wrong, correct? And it, like I said, it happens to everybody. It is how much you lose when you go wrong. So if I see that my thesis is going wrong, I just take a stop loss, cut the position, and take a step back, and then reevaluate. So the most important thing where people go wrong is that the stop loss they have in their mind and not on the system. So stop loss has to be in the system. Because what happens is that when those rates come, your mind stops working.
Right.
And similarly, even sell orders. Let's say you bought something and it's become like 10x. So then your mind just stops working, and uh, so hence all these orders need to be in the system. So you keep a stop loss in place. Secondly, avoid uh, avoid trading. So I think a lot of people have lost money in trading uh, rather than investing.
Correct.
Uh, so I don't trade, and obviously as a PMS we will not be doing it as well.
Right.
So I think if you done your basic study, you can lose, but I don't think you will lose big.
Can you discuss your views on averaging down and when it might be appropriate to use a strategy?
When you can average down when you think that the thesis hasn't changed, the story hasn't changed, the company hasn't changed, nothing has changed, the environment hasn't changed, but the stock price has changed. Uh, so which is basically that you are others are panicking and you are buying, which for me makes sense. Uh, because if the story is not changed, the thesis is not changed, the numbers are going to come, and yet the stock is like 30-40% of uh, its fair value. Why not?
So, the flip question of this is, how do you decide when to hold on to a stock or add to winning positions in your portfolio?
As long as there is value, as long as we feel that the stock is still undervalued. If you feel if it's overvalued, and that also keeps happening, is that today actually because of democratization of information, everybody comes to know with everything in 5 minutes. So sometimes the stock which should have done, let's say 2x in 3 years, does a 3x in 3 months. Just because everybody wants to load it and stuff like that. So then you take advantage of these surges to trim your position and exit.
Correct.
Trim or exit.
Can you give an example of a losing position that you held on to and eventually turned around, and what you learned from that experience?
Losing position which I held on to. Nothing. I don't hold on to losing position. Or actually I have losing position. And the ones that I do, I
You exit.
set my stop loss. Yeah. So I lose small.
So when considering whether to sell a losing position, what are some of the key factors that you take into account?
So I think a lot of people wait for a winning position to come before they sell a losing position. That I will sell this and buy that. It's like two different things. It's not like
Apples and oranges.
Yeah, it's just Apple. It's just they're unrelated. And in fact, cash is also position. And most people, very few people in India do realize that cash is also position. And you need to have some cash because the market continuously keeps giving you opportunities. Either Fed will increase its price, or COVID will happen, or Ukraine will happen. Some stuff is going to happen, or China is going to attack Taiwan. Something is going to happen that's going to give you stocks at mouth-watering prices, and you feel so dumb and you don't have money to buy that day.
Okay, so one more of these, difficult ones. How do you balance the desire for high returns with the need to manage risk and avoid excessive losses?
So over a period of time, I prefer surer alpha rather than higher beta. I am okay to make less money, but short money. Rather than going for a position which can make me more money, but can end up in a loss. Does that answer the question?
Yes. Can you elaborate a bit?
So basically what happens is that there are businesses which can go very high or give you losses. For example, commodity businesses. So if you get caught in commodity businesses at the top end of the cycle, then you get jammed and you don't even realize, because what happens, the numbers keep coming. The tough thing in commodity is, and why people find it difficult to invest, is because the numbers keep coming and the stock keeps falling. And you don't understand what's happening. And suddenly a stock which you bought at, let's say 10p becomes a 2p stock and still keeps falling. Because people in the industry, in the business, they know what's going to happen ahead of you. So that's a good example of what you're talking about.
So, we are all irrational in our own ways, sometime or the other, So, can you help investors use some tools or strategies to help manage their emotions and make rational investment decisions?
I think all technical investors, all technical analysts should learn some fundamentals, and all fundamental investors should learn some technicals, because both also help you in planning your entry and your exit. Sometimes what happens is that stocks become overheated or oversold. And if you have your fundamentals in place and you know what a fair value is, it can really help you if you match these two skills together. The other thing, again, I am saying that know what you own. Write your thesis down. I think in this age of electronics, people have lost the habit of actually putting pen to paper and writing down their thesis. I really appreciate people who do that, and because it also clears your mind when you actually write down in a company, in a non-emotional manner, what its strengths are, what its weaknesses are. Uh, and the other thing I tell every investor is that no weaknesses about your company. Uh, and try and see whether the company is doing something to overcome it. Strengths, everybody knows and everybody talks about strength. The promoter also talks about his strength. But I think the key is to understand the weakness and the solution to it.
So, one is we talked about the investor sentiment and managing emotion and taking decisions. The other is how to stay disciplined in your investment approach when faced with market volatility or unexpected events.
So unexpected events help you if you have cash, okay, and you've done your studies. A lot of times when we've studied companies and we like something, but it was too expensive, so the market keeps giving you opportunity to buy into those stocks, even though you've missed the first tranche or first leg of the bull run in that stock. So that volatility actually becomes your friend. See, people don't understand this, but bear market is born in a bull market and bull market is born in a bear market. And what you sow during a bear market, you reap in a bull market. Investing becomes more and more difficult actually in a bull market. A bear market is ideal. You have stuff available at good prices. You get good quantity of what you want to buy. It's very investing in a bull market is tough. Investing in a bear market is relatively much easier.
So, can you talk about some of the most important lessons that you learned in your career as an investor?
So, most important lesson, one, obviously, I mentioned earlier, that do your own scuttlebutt and everything. Secondly, is that find managements that are hungry for growth. Lot of time we find managements, good business, there's nothing wrong in the business, but the guy is happy in life, he's contented. So money can't be made on contented promoters. That guy has to be awake at night, he has to work hard, he has to have that passion to grow. That's something that I've learned. So a lot of time, like, I've invested in companies, there's nothing wrong with the company, absolutely nothing wrong, just that the promoter is happy, he's making 30-40 crores a year, and that's it. He's happy. He says, what will I do with more money? So any promoter that says, what will I do with more money? So I just walk away. I'm not interested in it. I would rather invest in a guy who's making 30 lakhs today and says, I want to make 30 crores in 10 years.
One last question, before we part to meet again. What advice would you give to someone who's just starting out in investing and maybe grappling with these types of decisions that we've all spoken about today?
So I think the most important thing that I will say that you need to spread your bets. Lots of young investors that I meet take oversized bets on stocks which are the fad of the day. So one pharma company that everybody used to be tom-tomming about 1 year ago, and today nobody talks about it, and it's there in every portfolio. So a lot of people discuss that in what I have, and you see the same stocks across portfolios, and stocks have just come all the way down, and people have just hung on to it. So my thing is, and an oversized position, 60% of portfolio, 70% of portfolio in one stock. So basically, you have to give yourself the chance to buy multiple stocks to give you those learnings, especially as a young investor. Money is not that I will buy one stock and it will become 100 bagger, and that entire money I'll put into another stock and it will also become 100 bagger, and then I'll be king of the world without 10,000 bagger. It doesn't happen that way. The best of investors in the world are struggle to meet a 20% CAGR over long periods of time.
Right. Utsav, those questions took me a lot of time to build up. I thought I will put you in a spot, but you've taken all the spotlight with great flair and ease.
Thank you,
And
sir.
I hope that your investments also yield you and your investors great returns.
Thank
And I'm
you.
sure that they will. Thank you for having come on the show. And God bless and all the best for the future.
Thank you, sir. Thank you for having me. Thank you. Take care.